A couple of quick examples for you that you might see. Very similar questions on the final exam. This one is for Bob's company. Bob's company has shown his partial worksheet for the month ending May 31st, 2023. You see the debits to cash, AR, prepaid rent, equipment of 6,000, 2,500, 6,000, 12,000, respectively. Then you have your credits of accumulated depreciation, notes payable, AP, owner's capital, 12, 2,500, excuse me, 2,000, 5,000, 6,600, and 12,000, respectively. You got a debit for owner's drawing and a credit for service revenue. You have some debits for your salaries, wages, rent expense, depreciation expense, interest expense, and finally a credit of $100 for interest payable. So, given this worksheet, partial worksheet by Bob's company, the question that you need to answer is how do you journalize closing entries for May 31st? All right. So, when you're closing these journal entries for May 31st, you want to get rid of the income and you want to get rid of the expenses. Okay, so journal entry number one, in order to get rid of the close the revenue account, since this is a credit balance, you need to debit that to close it out. You're gonna debit service revenue and you're gonna credit income summary. You have expenses that are normally debit balances. In order to close that to income summary, you're gonna credit salaries and wages and rent expense and depreciation and interest expense. You're going to credit these and you're going to debit the income summary. So it's just kind of opposite of what you did in the revenue, close that out. So revenue gave income summary a credit, expenses gave income summary a debit. This 12,500 less this 4,600 equals 7,900. So the balance in or the total in income summary is 7,900. But we have to get rid of that balance as well to close out the net income altogether. So in order to close out that credit balance of 7,900, you're going to debit income summary and you're going to credit your owner's capital to account for that net income. Then you also have owner's capital of owner's drawing of $1,000, this a debit balance up here. And so you want to close that to owner's capital by crediting owner's drawing and debiting owner's capital. So part B kind of shows us below what's happening with the income summary account that we created when we closed the revenue and expenses, and then eventually close the income summary account. So remember, we in our first entry above, we had to credit income summary for the revenue. In our second entry, we had to debit income summary for 4,600 to account for the expenses. And then we took that balance of 12,500 less 4,600, which is 7,900. We had to take that and remove that from income summary. And we took it from income summary to owner's capital. And don't forget, we took the $1,000 of owner's drawings to owner's capital as well. So you see uh, journal entry number four right here. And owner's capital actually started off with a $12,000 balance, credit balance, as you see above. So you see the start off with $12,000. You see the addition of closing out the income summary. You see the owner's capital debit for the final balance of 18,900.